Hi guys, today we'll be talking about fear of missing out. Fear of missing out. FOMO, FOMO. In case you are just joining us on this channel, please uh, hit the like button for the video and click the subscribe button below the video. Thank you. We are talking about fear of missing out. Uh, this is an emotion that is responsible for late trade entries. Fear of missing out is triggered by the urge to enter into a trade that is already late. In trading, price moves very fast at some point, and most of the time it moves slowly. So most of the people affected by fear of missing out entered towards the last part of the time when price moves very fast. Okay, instead of entering at the beginning of the impulsive wave or the beginning of the price extension, people tend to enter towards the end of the price move, and by the time price starts to retrace or reverse, their account starts to record drawdown or stop loss gets it. So let's look at an illustration. I have a diagram here showing price movement. Price moves at point A to point B. All right, and then we have point B forming a support. Of course, before price retraces to point C. And now people that falls into the category of this emotional disadvantage, which is the fear of missing out, will enter at point C, thinking there will be a reversal of price. But price eventually formed a support at B and then formed a resistance at C, and traders get trapped. Buyers get trapped around here because they don't want to miss out in the action or in the buying action. So and then price drops to point D. Of course, due to fear of missing out, buyers are trapped here. Of course, sellers will enter some sellers will enter at the breakout at this point, while some sellers will enter around here if they have the calculation or the plan figured out. They will enter early here, and some will enter here. But some sellers will enter at point D. They will enter late at point D, thinking price will continue downward. And of course, we have like a retracement to point E. Of course, the sellers that entered at point D due to fear of missing out from the trends, bearish trend, of course, they get trapped at point D while buyers ride up to point E. Of course, some buyers will enter at point E thinking that we have a reversal working out. But due to the initial support at point B now turned to resistance at point E, the buyers at point E that entered late at point E, not looking at what's happening on the left side of the chart, gets trapped at point E. Of course, the account will record some level of drawdown. Of course, some trades will get some stop loss hit somewhere around here. So sellers will also enter at point. Some sellers will enter early at point E, knowing fully well that there's an initial support at point B. Some sellers will enter at point E and then ride with the price and make some profit, while buyers will be stuck around here, and some will get panicked up to this point and close the trade in great loss, while some buyers will enter at point F Of course, some sellers will be looking at, just like the way we had a breakout here. They'll be looking at a breakout happening around this region, which is a support formed at point D, looking for a breakout so that they will have trend continuation. Of course, sellers that entered below point F will get trapped. This is most likely caused by fear of missing out. They don't want to miss out in the action of the bearish trend that is being formed. Of course, they get trapped at point F. Sellers will get trapped at point F, while buyers that already noted what happened on the left side of the chart, which is an obvious support at point D, will ride the new trend that has just formed. Of course, some buyers will enter early at point F and then ride the retracement or the reversal happenings, while because of fear of missing out in action, sellers will get trapped at point F, of course. Now at this point, some sellers will also want to enter, knowing fully well that there is a support at point B, there is a resistance at point E. Of course, they want to enter here to try and ride the reversal, okay? But they'll get trapped because, of course, an unexpected breakout will lead price to point G. Of course, because of fear of missing out in the resistance, they sell from the resistance. Because of fear of missing out, they enter late here, try to sell price. But of course, breakout leads to point G, and some buyers will enter at point G, knowing fully well that point E resistance has been broken. They will enter to buy at point G, and of course, not looking at the left side as usual, that there's an initial resistance, price dipped because of the previous resistance as point C, and then the buyers will get trapped at point G due to fear of missing out in the obvious bullish trend formation. Of course, in as much as price has broken the previous resistance, we have higher high, feel, oh, we have an obvious bullish trend formation and enter at point G due to fear of missing out in action. And then, of course, we have a retracement. Some stop loss will get hit somewhere around here. But, of course, for the buyers, luckily enough, price meets support and then starts to go up. Of course, sellers will like, oh, we have a retracement, it's going to go down, it's going to go down. You know, the way the argument is, the buyers will say it's going to go up, sellers will say it's going to go down. Some traders will join the bearish trend around there, thinking that price will go down. And then at point H, you have an initial resistance here turned to support. Price eventually goes up. Okay, so sellers will get trapped at point H. Sellers will get trapped at point H, and then buyers will come in here and then ride the trend continuation. Of course, some sellers will also bank on the resistance at point G, thinking price will go down and they will have a double top. But of course, price continues up to point I. So we have fear of missing out playing out here on the part of the buyers, and this made buyers enter late. Of course, price goes towards point D. Fear of missing out in the sell in the obvious bearish trend makes sellers enter at point D. Of course, price goes up. Fear of missing out, of course, make the buyers enter trade here, and instead of going up, price dipped. Fear of missing out, of course, will make some sellers to enter at point F, and price, rose up to this point. Fear of missing out, I want to enter early. I don't want to miss out in action. Enter sellers to enter here, and then price continues up. Fear of missing out also affects the buyers at point G, and price dipped. Fear of missing out affects the sellers at point H, and price rises. Fear of missing out, price dip, price rises, affecting the sellers at this point, and then price gets to point I. So, what are the things you are to look out for to avoid fear of missing out? Some of the things you look out for is support. What's happening on the left? Is there any support on the left? Do we have resistance on the left side of the chart? What kind of candle formation do we have on the left side of the chart? Is it the bullish engulfing? Is it the pin bar? You have to look at all those factors. Then what's the news saying? Do we have a news release in the next 5 minutes? When was the news released? Was it released an hour ago? You have to look at that. That also affects price action. Of course, you have to look at price action on the chart. Okay, and then you have to look at the higher time frame. What's happening on the higher time frame of the chart of that particular currency pair? Those are the things you have to look out for to avoid fear of missing out. So fear of missing out has blown so many accounts, and fear of missing out, say no to fear of missing out, avoid fear of missing out. You have to discipline yourself as the price really moved far. Do I really need to enter? I hope I'm not entering late. Those are the questions you ask yourself so that you don't end up blowing your account. All right. So till I come your way next time,